Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The sensex and the Nifty end in the red after a range-bound session. The Nifty falls below 19,000. The Rupee hits a record low against the dollar but continues to trade in a narrow band. Stock markets are largely in the green across Asia and Europe as investors await the US Fed decision later tonight. The CNBC Fed survey shows 100% market participant polls expect a status quo. Over 50% expect rate cuts only from September next year. Israel bombs a crowded refugee camp in Gaza, killing at least 50 people. Israel defends the airstrike and claims it killed a Hamas commander. Meanwhile, the Egypt border crossing opens for the first time since the war began, allowing limited evacuations from Gaza. October auto sales numbers paint a mixed picture. Cars, two-wheelers and commercial vehicle sales impress ahead of the festive season. Tractors come under pressure. The Indian government clears the deck for select companies to directly list on overseas stock exchanges but doesn't clarify on the kind of companies that will be allowed. The phased rollout plan will initially see overseas listings through the International Financial Services Centre at Gandhinagar's GIFT City. Sun Pharma reports a steady second quarter, revenue up 11%, led by strong growth in US generic sales. Margins contract by 100 basis points but remain in line with estimates. 182 crore shares across 15 companies will be eligible for trading this month as their 18-month lock-in period ends. Nearly 85% belong to just two companies, LIC and Mankind Pharma. The chief executives of AirIndia and Akasa engage in a verbal spat and exchange testy emails over poaching of pilots. Akasa's Binay Dubey allegedly accused AirIndia of breaching regulations to entice its pilots. AirIndia CEO Campbell Wilson hits back, saying colluding to prevent pilots from changing jobs is in violation of the law. Electoral bonds provide selective anonymity, says the Supreme Court. Even as the government defends the scheme to fund political parties, the Apex Court observes that there is an information hole as the bonds have removed safeguards like the limit on how much corporates can donate to political parties. All of that and more coming up for you, but straight to the day's market action. The Sensex and the Nifty ending in the red after a range-bound session. The Sensex lost nearly 300 points. The Nifty fell below the 19,000 mark, losing just under 100 points. Banks and mid-caps fared slightly better than the blue chips, but also ended in the red. The currency market, where the rupee hitting a record low against the dollar even as it remains on a tight leash. However, the fall is minor as the Indian currency is just 4 paise below yesterday's close. Forex traders have attributed the fall to persistent outflows by foreign funds. So that's the latest as far as the currency market is concerned. The big story that global markets are watching. The US Federal Reserve will announce its decision on interest rates later tonight. According to the CNBC Fed survey, all 100% of the market participants polled do expect a status quo. In fact, majority expect the Fed to hold fire for at least the next 10 months and expect the first rate cut only by September of next year. Steve Leesman here with the CNBC Fed. Thanks for joining us and catch our special coverage of the Fed decision. That starts 11 p.m. onwards right here on CNBC-TV18. We bring you minute-by-minute updates from Washington to Wall Street as Jerome Powell announces the big Fed decision. Israel has attacked Gaza's largest refugee camp in Jambalia, reportedly killing dozens. The Israel army claimed that the attack targeted a Hamas commander. The death toll since Hamas's surprise attack on Israel and its retaliation has now climbed to over 8,500 people in Gaza and around 1,400 people in Israel. The Rafah border crossing into Egypt has now been opened for foreign nationals and those severely injured to cross over. A huge crowd gathered near the border with the hope to leave the besieged Gaza. Aid trucks from Egypt have also come into Gaza earlier today. Israel Army's incessant strikes on Gaza, destroying buildings, hospitals, and now refugee camps, has invited global criticism. Telecommunication and internet networks are down across Gaza. Bolivia has announced it is cutting off diplomatic ties with Israel, accusing it of crimes against humanity in Gaza. Israel hit back at them, saying that they are aligning with Hamas. Others like Chile and Colombia have recalled their ambassadors to Israel. Iran's Supreme Leader Ayatollah Ali Khamenei has called on Muslim states to seize oil and food exports to Israel to bring a stop to the bombardment of Gaza. Well, that's the latest there from Israel and Gaza. But back home, the big story, the government has cleared the way for Indian companies to directly list on foreign stock exchanges. Such listings will initially be allowed only through the GIFT City SC, but ambiguity still remains on what kind of companies will be allowed to list overseas. Shivani standing by with the details. Shivani, the deck's cleared for direct overseas listing, but no clarity on the framework yet.
Well, yes, the Ministry of Corporate Affairs has finally notified Section 5 of the Companies Amendment Act 2020 that facilitates the direct listing of Indian public companies on foreign stock exchanges. The amendment will be effective from 30th October 2023. Now, remember, the said amendment to the Companies Act 2013 initiated in 2020, authorizing select companies to directly issue securities on foreign stock exchanges. The important part, however, here is the definition of select companies. There is still ambiguity on what kind of companies will be allowed and who will not be allowed to use this facility. Another problem currently is that there is no clear framework for such listing. The recent notification by MCA now sets the ball rolling for the amendment to be operationalized from the end of October, and also for the government to put out clear guidelines and norms for companies that want to use this facility. Remember, CNBC-TV18 had reported on October 16th that MCA and the Department of Economic Affairs are in advanced stages of formulating the eligibility norms for such direct overseas listing for Indian firms. According to sources, the requisite minimum period of companies' operations in India can be among the criteria being mulled over by the government. The plan is to initially roll out the overseas listing through GIFT City's IFSC, followed by broader listing in the overseas markets. Experts now suggest that this move is particularly helpful for startups looking to list overseas for better valuation, subject to their eligibility for such listings.
Shivani, many thanks for joining us. Now, WeWork is planning to file for bankruptcy next week. According to a report by Wall Street Journal, the office-sharing firm will file its Chapter 11 petition in New Jersey. Remember, the company has clarified that bondholders had given it 7 days to negotiate with shareholders after it missed its interest payments on the 2nd of October. WeWork has declined to comment on reports calling this speculation. Now, GST collections for October rising 13% to 1.72 lakh crore rupees in October, making this the second highest mop-up since the introduction of the goods and services tax in 2017. GST collected for this fiscal year so far amounts to nearly 12 lakh crore rupees, which is about 35% lower than the amount that was collected in FY23's full-year collections. Auto sales coming in for October paint a mixed picture. Cars, two-wheelers and commercial vehicle sales have impressed ahead of the festive season. However, tractor sales are under pressure. Sonia is standing by to wrap up the numbers for us. Sonia.
Well, thanks a lot for that. You know, it was a mixed bag this time around for the auto sector, at least the numbers that have come out so far. So let me talk about the good ones first, and then we'll move to the weaker ones. Maruti had a very good set of numbers this time. Total sales growth of 19.1%, coming in at 1.99 lakh units. Hero MotoCorp also had a very strong start to the festive season. They spoke about a sales growth of 26% year-on-year in the month of October, coming in at 5.74 lakh units, and talking about very strong trends in the festive season. Bajaj Auto also echoed that same view, saying that they were pleasantly surprised to see how consumer has come back to the market, especially in some of the, some of the weaker pieces like the affordable segment. So the total sales for Bajaj Auto has gone up by 19% on a year-on-year basis. Eicher Motors as well, total commercial vehicle sales was up about 24%. So that was a list of good numbers. If you move on to the slightly weaker numbers, it's the tractor sales where there was weakness. That's also because of the, erratic monsoons that we had, as well as, escorts pointing out as to how the demand trends are expected to improve. But in the month of October, because of the delayed monsoon season, it sort of on a year-on-year basis, it is not comparable. So total tractor sales down 8.9% year-on-year, M&M tractor sales down 3% year-on-year, and Tata Motors as well, the domestic sales growth was in low single digits, just a 6% growth year-on-year. So that was also on the weaker side. Back to you.
All right, Sonia, many thanks for joining us. In earnings, shares of Sun Pharma up in trade today after the company reported a good set of numbers for Q2, beating street estimates across most parameters. The company's net profit up 5%. Revenues gained more than 11% on an annual basis, and this was largely led by healthy sales from the domestic and US business. Now, two of India's airlines are locked in an unpleasant dispute over hiring of pilots. We're talking about Akasa Air and AirIndia. And now the fight has reached the top deck, with Akasa Air CEO Vinay Dubey dialing AirIndia's CEO Campbell Wilson. And it didn't end there, as the two also exchanged letters carrying forward the war of words. Madiha joins us now with excerpts from the letter written by AirIndia CEO to Akasa CEO Vinay Dubey. Madiha, what does it say?
Well, pilots seem to be an asset in demand for all airlines now, especially as they expand their wings with air travel picking up. CNBC-TV18 has been reporting on the legal clash between AirIndia and Akasa Air, with Akasa accusing Air India of poaching its pilots. This particular war of words between the two CEOs, Campbell Wilson and Vinay Dubey, happened in late September. In the letter, Campbell Wilson told Vinay Dubey he took his call in good faith upon learning from a third party of his desire to speak to him, and asked him to not interpret this courtesy as his assent. Responding to the allegation that Air India is contravening the civil aviation requirement on hiring of pilots from other airlines, Wilson said that the Director General of Civil Aviation had expressed that the relevant provision was not currently enforceable. He also reminded that Akasa too had previously approached and hired pilots from Air India Express, Vistara and at least two other local airlines, notwithstanding the same rule that Akasa is now citing when its own pilots are joining other airlines. In the letter, Air India CEO also conveyed his refusal to not collude with Akasa, constraining the right of employees to change jobs. He said this could be a potential violation of competition law. Wilson also advised Akasa CEO to make investments in its people to attract, retain and develop its own staff and provide good careers and growth opportunities to the staff so that they are retained. We reached out to Akasa to understand its version, but we get to receive any response from the airline.
All right, the war of words over hiring pilots and poaching pilots continues. Time for us to head into a short break, but up next, electoral bonds provide selective anonymity, observes the Supreme Court, even as the government defends the scheme to fund political parties. That and more when we return. Well, it is day 2 of the hearing on a batch of petitions challenging the electoral bond scheme. The Supreme Court observing that electoral bonds provide selective anonymity. The Solicitor General, who's representing the government in the case, however, argued that electoral bonds are neither anonymous nor opaque, but confidential by design. Ashmit Kumar joins us now to take us through the key observations from the 5-judge bench. Ashmit, so the government presenting its point of view, saying that this is necessary, and if the electoral bond scheme is scrapped, it would take the country back many years. Take us through some of the key observations that the Supreme Court made.
Well, to begin with, the Solicitor General appearing for the centre sought to defend the electoral bond, said that this is designed to ensure that there is only white money and no black money is coming into the political system. Even refuted the argument of the petitioners that the bulk of the electoral bonds were going to the ruling party by arguing that even between 2004 and 2014, the bulk of the donations were going to the then ruling party. And finally also went on to argue that there is not a case of anonymity or opacity with respect to electoral bonds, but a case of confidentiality to ensure that there is no political retribution against corporate donors. These arguments, however, were subjected to heavy crossfire by the 5-judge bench. Number one, the bench observed that, let's be frank, given that the SBI is the one issuing these electoral bonds, it will not be a challenge for the government of the day to get access to data with respect to donors and donors who are making contributions to opposition parties. And this is where the Supreme Court said that this is not a case of confidentiality, rather a case of selective confidentiality, where the SBI and the law enforcement agencies and through them the government of the day will have access to information. Number two, the Supreme Court observed that there is also a flaw as far as the electoral bonds are concerned in terms of allowing for trading of bonds. The Supreme Court argued that a corporate donor at no point in time would want their head, their name in the books of accounts of SBI as buyers of these electoral bonds, and they can easily ask others who have the relevant KYC to procure these electoral bonds from the SBI, and therefore there's a question of the tradability of these electoral bonds, the second concern. The third concern that the Apex Court raised as a part of today's hearing is that The argument that the centre made that if electoral bonds are struck, then we will travel back to the earlier regime need not be true. The Supreme Court is saying that we're not preventing the government of the day to come out with a new, more transparent, more efficient regime, and therefore to say that argument will not hold. And finally arguing that even under the earlier regime, there were safeguards in place. There were limits with respect to how much a corporate can deposit. There were requirements under the Companies Act that required the companies to disclose the amounts in question and the parties to which they were making contributions. No such safeguards available now under this new regime. So that marks the end of day two. The arguments, we understand, will continue tomorrow as well. We'll see more from the Solicitor General.
All right, Ashmit, appreciate you joining us. That's the latest there. Day two of the electoral bond case that is being argued in the Supreme Court. Now, the government has approved 110 requests for grant of import licenses for laptops and computers. Government sources have told CNBC-TV18 that most requests submitted have been approved unless they figure in the denied entity list. Abhimanyu standing by now with the details. Abhimanyu, this is really a result of the import curbs or restrictions that the government brought in. Take us through what we know so far in terms of the requests submitted to the government and the approvals.
Government sources have indicated that around 110 requests have been approved on the government portal for imports of computers and laptops. Most of the import requests which had been given on the portal have been already approved. One request which has been rejected was from a company which figures in the denied entity list. The import management system for laptops, computers and tablets has already kicked in from the 1st of November. Earlier, the United States, South Korea and several other countries had expressed concerns over this new system. The United States had also expressed concerns before the WTO Committee on Market Access, claiming that there would be problems and issues which would be faced by several end users as well as exporters. However, India had maintained that there was nothing amiss or wrong with the system and it was completely in line with India's commitments before the WTO and several other international commitments. It remains to be seen how the things are going to pan out as further requests would possibly be submitted before the portal, and any further decisions or actions which would be taken from here on would be determined based on the new import management system.
Abhimanyu, many thanks for joining us. Uttarakhand Chief Minister Pushkar Singh Dhami addressed an event in Gujarat today to invite investors for the Global Investors Summit 2023. The Chief Minister said the summit will be held in Dehradun in December and will help the state achieve its goal to double the GSDP in the next 5 years. Well, with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned. The news will continue here on CNBC TV 18. We're back in a minute after this short break.